Welcome to part 2 of this EOH analysis. What I'll be doing in this video is using charts. I'll demonstrate how we can combine technicals and fundamentals in the form of earnings announcements as well as news releases. For the record, EOH was founded in 1998 and also listed in 98. And even though my price data starts in 2003, it does not affect the wave count. I'll start my analysis from May 2014, and just to show where I believe we were at this juncture in the market. We were in wave 4 and we were to build wave 5. So just to highlight this. Okay, so as I explained in part 1 of the video, an upward movement occurs in 5 waves, labeled 1, 2, 3, 4, 5. And at this juncture, we seem to have completed wave 4 and we had going to form wave 5. Okay, and let's analyze wave 4 before we proceed with wave 5. Wave 4, as we can see, had a general sideways movement, and sideways movements in Elliot Wave are associated with triangles, which I will label waves A to E, and highlight the triangle by also drawing in the trend lines. Okay, and now let's see how wave 5 unfolded. So we see wave 5 is unfolding aggressively. Now, as we go on in the chart, there are certain events which I will highlight, and we will see how the market reacted to those events. Those events are either earnings announcements or news releases in the press or online. Okay, so if we just move forward slowly here. On this day, 17th February 2015, market announcement, EOH acquires construction computer software. So we can see even at this advanced stage of the trend, EOH was making more acquisitions. And those who know the history of EOH know that it's a company that grew aggressively, predominantly because of acquisitions and organically. So there was a acquisition there, and not too long after that, February 24th, there was a trading statement for the 6 months ending January 2015, and the fundamentals were looking good. Earnings per share were up 20 to 30%, as well as the headline earnings per share. So fundamentally, everything was still sound. And on the 11th of March, with the actual results, revenues up just under 40%, profits after taxes up also just under 40%, earnings per share, headline earnings, cash, everything is up, everything is still looking solid fundamentally. And wave 5 continues to unfold. And if I just slow down a bit here, I can see currently we've got wave 1, wave 2, and this is wave 3. And then we push back for wave 4. If I just slow down a bit. And on this day, 4th of June 2015, EOH to acquire Pan-African IT firm. EOH Holdings said it would buy a stake of between 49 and 80% in Pan-African IT Group in a deal that would give it substantial presence on the continent. So again, more acquisitions, this time focusing more on the rest of Africa. Okay, just to move slowly from here, we saw that the market continued pushing up until it got to 180, which is the all-time high in EOH. Okay, so here we are, all-time high, 180. And just to confirm that the fifth wave also unfolded in 5 waves, we can label this advance as 1, 2, 3, 4, and wave 5. So we've got our 5 waves for wave 5, and we can now be almost certain that the uptrend is complete and we can expect a pullback or a major market correction or even a bear market, but we can never forecast the extent of the correction. And as we would expect between waves 3 and wave 5, we have divergence between price and the MACD indicator, which is a momentum indicator. And just to highlight that, once we get our sell signal, it will be there. We can see price made a new high here, but this new high was not confirmed by the momentum indicator. And that is what we mean by divergence. And then from here on, price starts to trend lower and we start seeing some aggressive moves to the downside. And on this particular day, on the 24th of August, there was a trading statement for the year end, 31 July 2015. Earnings per share up 20 to 30%. Headline earnings per share up 20 to 30%. So this was an excellent trading statement, but price crashed 9% on that day. So again, we see we had a very, very good news release, but still the market crashed. And as we proceed further, on this day, 16th of September, the results for the year end, 31 July 2015, everything was still good at EOH. Revenues, profits, earnings, everything was up, dividends. And there was a news article later in the day which had the following comment: the growth, as always with EOH, was both organic and acquisitive. This was the first time operating profit had hit 1 billion. So again, excellent results, but price trends lower. Now at this juncture, I just want us to take a look at something which is very interesting, and we will look at a moving average combination that's used by investors. So what I have here is the 200-day moving average, which is seen as a long-term moving average, as well as the 50-day moving average, which is seen as a more medium-term moving average. Now, since the initial stages of this rally back in 2009, when we had the 50 moving average crossing above the 200 moving average, these two moving averages have been crossed, and that was due to the very, very strong bull market that EOH was in. But at this stage here, we can see the two moving averages starting to converge. Now, from an Elliot Wave perspective, we've already ascertained that the uptrend is now complete because we have 5 waves complete, but the moving averages, because they lag so much, haven't given a sell signal yet. But as we move forward from here, we can see the moving averages start to converge more and more. And at this point, even investors would start getting worried, because the minute you have these two moving averages converging like this, it shows that momentum, or there's a big change in trend that's coming. And we see now further downside movement in price, and right here we have the cross. But at this stage, the market has moved down almost 33%, and it just emphasizes how slow moving averages take to give a signal. So as we continue here, on this day, 12th January 2016, another announcement: more acquisitions relating to EOH expansion into the Middle East and Africa. So again, more acquisitions, as we can see, in Morocco, Turkey, Iran, Mozambique, yet the share price is now starting to get depressed. So at this stage here now, from an Elliott Wave perspective, the market has clearly made 3 waves to the downside, and now we can see that price is starting to rally. At this stage, in total, the market has pulled back just under 35%. And market participants would be enticed to buy this market, saying that the big pullback or big correction is complete. What we see as Elliotians at this point in time is that this market has corrected in 3 waves, which I'll label tentatively A, B, C, as we don't know whether this 3-wave decline is wave A of a flat, or maybe we're making a more complex correction. So this is a tentative labeling. And as we move forward, on this day, 23rd of February 2016, trading statement for the 6 months ending January 2016, earnings per share again up 20 to 30%, headline earnings up 20 to 30%. So again, fundamentals still looking great for EOH, and the market starts to recover somewhat. And yet on this day, on the 9th of March, the actual results for the 6 months ending January 2016, revenues up 30%, operating profit for the period, headline earnings, cash, everything is still up. Fundamentals again still looking good. And yet on this day, the market actually crashed about, well, I wouldn't say crashed, but it pulled back 3% on a good announcement. And then from there on, the market starts to move sideways somewhat, making a bit of a correction. And on this day, more acquisitions. EOH acquires 100% of Aptronics. So again, EOH just keeps buying more and more acquisitions, irrespective of where the stock or the share price is within the trend. Well, most CEOs, entrepreneurs wouldn't be looking at charts and trying to ascertain where the market is. If there's a buying opportunity, they will buy, and they'll believe that whatever acquisitions they do will add more value to the firm. And from there on, the market continues to make a correction. And we will start seeing now price volatility returning. So if we look at the share, it's making a correction now, but then it will start to rally again. Okay, and we see a bit of volatility, and then the market will start to push up. So at this juncture here, we can see that this was really a corrective move, and we can show that in the channel. And then the market starts to push up aggressively again. And on this day, 31st August 2016, trading statement, results for the year end, July 2016, earnings per share, again, brilliant results, up 20 to 30%, headline earnings up 20 to 30%. But this time, the market seems to like the news. And we start to see an aggressive rally. And on the 14th of September, we have the actual results for the year end, 31st July 2016. Again, just about every critical metric was up, and up more than 15%. And in 2016 was actually the first time that EOH revenues had exceeded 10 billion. So again, fundamentals are looking excellent. Now what we see is the share price is approaching the all-time highs of 180 Rand per share. But will it get there? And the answer is no. Now, I'd like to take a bit of time just to emphasize the warning signals that were evident in this chart. If we look at the moving averages again, from this death cross, we can see that the moving averages crossed again here. And this would have enticed market participants to believe that the uptrend was resuming again. But if we look at the momentum indicator, now this is one of the great teachings I got from the late Dr. Clive Roffey. If we look at the MACD at the peak of wave 5 and at this most recent peak here, we can see that the MACD made a new high. But this new high was not confirmed by price. This is what Dr. Clive Roffey would then refer to as reverse hidden convergence. This was the first sign that the market was showing weakness as the MACD was making new highs, but price was not confirming these new highs. Now, if this is the top and the top is in place, from a technical perspective, we can see that this market fell just short of the previous high. And anyone with a basic understanding of technical analysis will already see that what we have here is what many would refer to as a double top formation, which is not yet confirmed. But we can see here we have what looks like a double top, which is a major reversal pattern. So what would confirm this as a double top is price breaking below this neckline here around 117. But we can't preempt it. It will be confirmed once price breaks below here. Now, if we had forecasted this as a double top, what would be the price implications? Well, to forecast where a double top will terminate, we have to take the length or the price length from the peak to the neckline and project it from the break of the neckline. And this chart is still in log chart, log scale. So with this double top formation, even though it's not yet confirmed, but once it were to be confirmed, the price target for EOH would be at 54 Rand. So already as technicians, we would anticipate that we are now in a bear market. And with the use of the Elliot Wave Principle, we wouldn't necessarily wait for a break below this neckline to confirm that we are in the bear market. But be that as it may, at this juncture here, we could label this advance as wave 1 or A, as we're not sure. The market could still make 1, 2, 3, 4, 5 and start another rally. Here we would have to label this tentatively as 2B. And this peak as 3 or C. Now, the first signal that we would get that this market is not impulsing is if we see a pullback back into the price territory of this wave 1 peak. So referring to the rules of the Elliott Wave Principle, wave 4 should not enter, or in general should not enter the price territory of wave 1 and may not terminate in the price territory of wave 1. So as the market moves from this peak here, we see downside momentum starting to increase, and there we violate, and again there. So already at this point, I would not label this as an impulse, and I would see it as a three-wave move. So at this point, we can see that the market is starting to resume to the downside. Now, as the market resumes lower and lower, 27th of January 2017, there's an announcement. EOH is growing its eGovernment solutions footprint. So on this day, EOH got some government contracts, which was good news for the company, more revenue generating contracts, and the market had a nice, was that 4% move up that day. And then on the next day, there was an article in, oh, this is the SENS announcement. Oh, no, this is an article. And the article had a headline, EOH punts the business after shares tumble. And quoting from that article, EOH tumbled more than 8% in 2 trading sessions on Wednesday and Thursday as investors fretted that one of the JSE's growth stories of the past decade might be losing a little steam. So already now, the sentiment is starting to change. We failed to take out this previous high. We're seeing the market pull back aggressively, and the news headlines start to paint a different picture now. But at this juncture, I just want to take time to read this interview that a leading asset manager had with one of the financial journalists. And this asset manager had this to say: EOH remains a solid business with good growth prospects. It continues to trade at a healthy multiple of 21.8 times trailing earnings. The results for the past 2 years have been phenomenal. The fact that the shares have been under pressure suggests more that investors had become overly exuberant rather than there being anything fundamentally wrong at the group. I agree. At this point in time, there was nothing wrong. Every earnings announcements, whether interim or year-end, was still showing increases of 15 to 30%. EOH reports its next set of results in March. They'll again probably be fairly good, and the share price will probably go up a bit. However, investors should not expect the performance of the past 5 years to be repeated over the next 5 years, purely because EOH is now a large company and growing off a large base is more difficult. But I don't think the share price is going to fall out of bed either. There is nothing wrong at EOH. If there is, I certainly haven't seen it. Now, this is the issue I have when you look at markets purely from a fundamental perspective. You're just looking at the numbers. You're not looking at how the market is behaving. You're not looking at investor sentiment. You're not looking at how the price has been moving. You're just looking at the numbers. The numbers don't reveal what's happening in the market all the time, if not most of the time. So if you were to look at buying EOH based on that interview, you would have bought at a horrible, horrible time. So as the market resumes, on the 3rd of February 2017, more acquisitions. EOH acquires 100% of Cornerstone Group of companies. And on this day, 15th of February 2017, SENS trading statement 6 months ending January 2017. Again, fantastic results. Earnings per share up 20 to 25%. Headline earnings per share up 20 to 25%. And later on that day, there was a news article with the headline, EOH jumps 7% on trading update. So we've seen already that these trading updates have different reactions. Sometimes the market goes down, sometimes the market goes up, sometimes the market just doesn't react. Yet every single update is a good update. So that's Mr. Market for you. You never know how the market is going to react. And as we progress, we see that even with this great trading statement and this massive 9% rally, immediately thereafter, the market starts pulling back. And on this day, 15th of March, results for the period ending January 2017, again, all the key matrices and key metrics, all of them are up. A news headline came out later that day, more strong results from EOH. EOH is nothing if not consistent. And indeed, EOH was consistent. Every earnings announcement, all the key metrics up 15 to 30%. Even at this stage of the market, we're still getting good fundamentals. But price continues going lower. Price just goes lower and lower and lower and lower and lower. Now, this is where trouble started for EOH. This is where the big problem started. On the 13th of April 2017, here's the headline: the minister, the middleman, the mansion, and the new corporate kid. Daily Maverick and amaBhungane published a story alleging that EOH had corrupt dealings with SASSA. This was immediately refuted by the company. And shortly thereafter, the market started picking up again. Now, at this point, I just want to emphasize a couple of things. We can see with this double top narrative, I can actually remove this now and label this properly as ABC. So we can label this as well as A, B, C. The double top at this point is not yet confirmed. The neckline is still intact. But this decline has occurred in a clear 5-wave pattern, which I can label now 1, 2, 3, 4, 5. But because wave 4 overlaps into wave 1, this is a leading diagonal. And a leading diagonal also has trend lines. So a leading diagonal is wave 1 in a wave 5 sequence. So at this juncture, I can already, or we could have seen that the market was going to make an impulse of this nature. A 5-wave impulse of this nature, which would be consistent with the price projection we have for the double top of about 54 Rand. So that being said, we can start labeling the advance that we are forecasting. So we are forecasting that this is wave 1, we forecast wave 2, we know we're going to get wave 3, a wave 4, and a wave 5. Okay, and then on this day 16th or 26th April 2017, another news article, the joy of many avenues, slowing growth should not hold EOH back. Again, positive news headlines. And again, this was a group of analysts who were covering EOH, and they had this to say: we think EOH still has exciting prospects and is quite capable of growing organically. We do not foresee anything preventing this company from posting double-digit growth numbers. Given its PE ratio of 20, which is largely in line with that of the rest of the market, we do not think EOH needs to post super growth to justify a buy. So again, buy signals, buy recommendations coming from analysts. What happens after that? Market starts moving down, and On this day, the market had a bit of a crash, and what was behind this crash? Market was down just under 7%. 15th of May 2017, EOH CEO Asha Bohbot to step down was the headline. The company announced the retirement of its founder and CEO Asha Bohbot. This announcement surprised the market and led to a minor sell-off. So this resignation or retirement was not announced previously. It was sudden on that day, and so the market had a shock. So we can call this a shock reaction to this event where the CEO is now stepping down. And we can now label this as wave 2, and now we are building for wave 3. And the market, and again here we see here we didn't break below this neckline, so at this stage the neckline is still safe, but the market is trickling lower and lower. And on this day, another massive article, 17th of July 2017, headline: SA's own Guptas, Danny and Gian McKay. So basically what happened here was the business report rehashed the April Daily Maverick article, which dealt with the SASA allegations. And the next day, there was a SENS or a SENS release by EOH strongly denying these false and unfounded insinuations. And they were not happy that this article was a rehash of a previous article and failed to mention their repudiation response to the original article. And later on in that day, there was a news article again, EOH slams report suggesting execs more notorious than Guptas. So at this stage, EOH is starting to experience some very, very bad news, very, very bad news headlines. Okay, so where we are in the market now is we are now currently building this wave 3. And this wave 3 is also not going to be a straight line. It's going to break down in 5 waves. So we can start anticipating those 5 waves. We can label this as wave 1, wave 2, wave 3, wave 4, wave 5. For that wave 3. And as the market progresses, oh, very important before I forget. If we look at the moving averages, again, you'll see that during this downtrend, they gave another death cross. Now within this period, we've had 2 death crosses now. Now a death cross is when the 50 moving average crosses below the 200 moving average. So we had one here, and now we're having a second one. Now as technicians or even investors who make use of these moving averages, to have these 2 crosses within such a short space of time should have been a warning signal that this market had overextended itself. Not only that, at this point now, we have a clear break of the neckline. So at this point, we can say that the double top is now confirmed and the bear market is now set. So whatever happens going forward, we know we are in the bear market. We have a price target of about 54 Rand at least. And as the market progresses, there's another news article on the 28th of July 2017 with the headline 7 burning questions for EOH as corruption allegations bubble over. So again now, more and more negative news coming out against EOH. And on the 1st of August 2017, there was a SENS announcement that FOORD Asset Management had increased its shareholding in EOH to 5.4%. So perhaps FOORD felt that at this stage the market represented good value because it had a major correction. At this point in time, I'm sure the correction was about 45 odd percent, and they saw it as a good buying opportunity. But it could also have, well, not from their perspective, but from the market perspective, it could have been seen as a good signal that institutions are still buying EOH. But that didn't stop the share price from dropping further, and the market just continues dropping and then starts moving sideways a bit. So at this point, we can label this as wave 3, and now we are building wave 4. Now on this day, we had a almost 5% drop in price, and there was a trading statement. Again, results for year-end 31 July 2017, revenues are still up 21%, earnings per share still expected to be up between 10 to 20%, headline earnings per share still up 10 to 20%. So fundamentally, the numbers are still looking good. The numbers are still good, but even though we had a positive announcement that day, the share price still went down almost 5%. And we had further sideways movement until again another volatile day. And this day was the 19th of September 2017. And this was now the actual results for the year end 31 July 2017. Again, all the key metrics are still up. Revenues, EBITDA, earnings per share, headline earnings, dividends, cash, and there was even a news article later that day. EOH climbs as dividend hiked 16%. So again, the numbers are still looking good, but we can see how volatile this day was. Again, just shows that you can never predict how the market is going to react to any news, whether it's good news or bad news. And from there on, the market continued to trend lower. And just to emphasize at this point, this move, because it's so choppy, it looks like a B wave. So what I'm seeing here is the market was making a flat correction, ABC, for wave 4. So wave 4 will terminate somewhere around there. And the market then started pushing up a bit. On this day, there was another massive news headline on the 25th of October 2017, and it had to do with amendments to amaBhungane's EOH article. This is now amaBhungane. I'm quoting amaBhungane now. They say in their report, we found no evidence that either EOH or the executive acted unlawfully. And later on in that day, there was another news article with the headline, EOH says its name has been cleared. And quoting, EOH said it had engaged in a series of extensive interactions with amaBhungane. The investigative journalism team has subsequently confirmed that it has found no evidence of any wrongdoing on the part of EOH. So this should have given the market some confidence that there were no shady dealings by EOH, and the market should have rallied to some degree. But let's see what happened. Just a minor rally, and then the market starts pushing back down again. So again, the market just discounted that piece of good news and carried on in its original direction, which was downwards. Now we are in November 2017, and after much more downside movement, on the 24th of November, PSG Asset Management increases shareholding in EOH to 5%. So more institutional buying of EOH shares, again, probably because PSG maybe felt that at current levels, the market was undervalued, with amaBhungane basically retracting, felt that all these allegations were unfounded and EOH should start recovering again. But what happened after that? As you guessed, market just keeps going down and down and down. Now I want to slow down here because this is where things got very interesting in December of 2017. So the date now is on the 4th of December. Now we had a massive crash, 11% on the 6th of December, and there were no news or anything reported that day, but the next day there was an even bigger crash of almost 35% in one day, 35% drop in price. And that was attributed to a couple of articles, SENS announcements that day. It was a very, very chaotic day for EOH. So let's just go through 7th of December 2017. Allegations were leveled against one of its business partners, Keating, former CEO of Grid Control Technologies, a business EOH acquired in November 2015. And same day, there was a SENS announcement or SENS release, but this was now after market hours. As you can see, the time was 17:43. It was a voluntary announcement regarding the volatility of the share price. This update did not seek to give an explanation of why the share price was so volatile, but rather to reassure investors that EOH is a good business. And same day, there was another article with the headline, EOH shares plummet 35%. And within that article, they mentioned that Jian McKay, an executive director of EOH, had sold 75,000 shares with a total value of 6 million, but they didn't say why he sold the shares. If you thought that was bad, it was only getting worse for EOH, as the next day there was another very, very volatile day of trading, and the price crashed to just above 26 Rand on this day. And the reason behind this crash was due to the involuntary sale of shares by certain directors due to margin calls against equity financed transactions. So there was a lot happening at EOH, and by now the bear market was starting to build up a lot of steam, lots and lots of bad news, and the sentiment around the company was starting to change from good to extremely bad. So just to look at where the market is now, we've completed 3 of the 5 waves. Just to show, we have now completed 3 of the 5 waves. So the bear market certainly isn't complete. So from a technical perspective, even if the market were to recover, as Ellioticians, we would know that any recovery from here on is what we call a bear market rally, and we wouldn't be too excited about it, as we know that wave 5 still needs to happen before we can say that the bear market is complete. So on the back of a very, very horrible December 2017, there were further developments. On the 11th of December, there was a SENS announcement released by EOH, where they basically detailed that EOH has established that both the high volumes as well as the substantial drop in share price was triggered by forced sale of shares by financial institutions against equity finance transactions to various individual shareholders, including 2 EOH directors. And within that SENS announcements, they made mention that recent media allegations relating to Mr. Keating caused EOH to expedite the unwinding and conclusion of the sellback agreement. So you can see here now EOH are basically selling back the companies they bought from Mr. Keating, almost being forced by circumstances due to allegations and them wanting to distance themselves from Mr. Keith Keating. And within that same SENS announcement, there was an announcement that EOH has appointed ENS Africa, which is a law firm, and ENS Africa will review all public sector engagements going forward. So yeah, December 2017 was extremely rough for EOH, and the market saw a bit of a recovery. And on this day, so here they're basically detailing the impact of the sell-back agreement, and that the unwinding is expected to result in a non-cash once-off reduction in earnings, but would have no impact on headline earnings. And this bit of news was really just ignored by the market. It was almost like a non-event, and the market continued to recover slightly and then started moving sideways. And on this day, on the 12th of March 2018, EOH announces major restructuring, resulting in the creation of two distinct businesses in the group, EOH and what was then still known as the new company, which later on went to become Nextech. And then we saw again volatility coming back down almost 21% that day, and that was due to a trading statement on the 14th of March, review of the 6 months ending January 2018. Again here, revenues up 16%, but for a change, EBITDA headline earnings were now starting to go down. EBITDA down 5 to 10%, headline earnings per share down 20 to 25%, and this was the first time that earnings per share and headline earnings per share had gone down from the previous period. And later on in that day, there was a newspaper article or a online article, EOH plunges on weak earnings, headline earnings per share expected to be lower by between 20% and 30%, despite a rise in revenue. So even on the fundamental side now, things are starting to look a bit iffy for EOH, and we see price volatility returning, and the price just tumbles from there. On this day, 28th of March, these were the actual results for the 6 months ending 31 January 2018. Revenue up 19%, operating profit, EBITDA, HEPS, all down. And an article that day, EOH headline earnings slump 23%, and this was justified as adverse, unfounded media coverage temporarily affects the group's position in the market. And the next day, 29th March 2018, headline, EOH was caught up in a state capture war. And this was a quote or a statement made by former CEO Bohbot. And he went on to say that during this period, the business was in a great shock and trauma. So again, just more and more bad news for EOH. And there was another article on the 10th of April 2018 with the headline, two worrying signs in EOH's numbers. Some metrics are far outstripped from top line growth. So all of a sudden now, even the analysts are starting to have a change in tone. So sentiment is just getting worse. On the 16th of April 2018, major headline, shareholder discontent at EOH, and there were sizable votes against director appointments and the remuneration policy at the AGM. New CEO Zunet Mayet had 15% of shareholders vote against his appointment as executive director. I can only imagine how that made him feel. But anyway, the market continued just going down, 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 down. Just kept going down, down. And I just want to highlight something now at this juncture. So at this point in time, we can label this as wave 4. I most probably in real time would have labeled this as wave 5. But in order for the wave 5 to be confirmed, we would have to see a 5-wave rally. And this is the beauty with the Elliot Wave Principle. When you are wrong, it will show you that you are wrong. So if this was the market bottom, we would expect to see a 5-wave rally. And this 5-wave rally, this low of 2339 would have to hold. So it would be very wise to label or show this market bottom or perceived market bottom at 2339. So I would have tentatively labeled that as a market bottom, but anticipating a 5-wave advance and then a pullback. On this day, (27th of June 2018), major headline again. Mayet steps down as EOH CEO amid major restructuring. Zunet Mayet is to take the reins at newly created subsidiary Nestec. So Zunet is no longer now the group CEO. He's going to be the CEO of the new subsidiary. And within the same month, so the share price starting to recover. And there was another big announcement. 19th of July 2018, EOH appoints Stephen van Coller as new CEO effective 1 September 2018. Clearly the market loved those news. The share was up almost 22% that day. And not long thereafter, another announcement, EOH enters into $1 billion empowerment deal with Lebashe, making the firm one of the largest majority black-owned technology companies in Africa. So at least some positive news here and there. And we see another push up before the market starts to recover again. Now, in real time, I would have been extremely confident that this was a 5-wave advance. 1, 2, 3, and a bit of a stuff up there. 1, 2, 3, 4, 5. In real time, I would have labeled this as a 5-wave advance. It looks good. It looks like a 5-wave advance. But with any system, there's no such thing as perfection. That's why I would then label this bottom here as invalidation. And this again is the beauty with the Elliot Wave Principle. When you are wrong, it tells you and it lets you know that you are wrong. You don't end up holding for long periods of time hoping that the market goes in your favor. So what does invalidation mean? It means since I've labeled this as a 5-wave advance, according to the Elliott wave rules, if this is now wave 1, if this is now wave 1, wave 2 should not terminate below the low of wave 1. So wave 2 can pull back, but it cannot break below 2339 before we're starting to see an advance again. So that is what is meant by invalidation. So let's see how the market moved on from there. And on this day, 6th September 2018, trading statement, year end 31 July 2018, revenue again up 8%, but EBITDA, headline earnings per share, down 15 to 25% and 30 to 45% respectively. And the market starts to push down again. And on this day, 3 October 2018, results year end 2018, normalized revenue up, but all the other metrics were down. And this year 2018 was the first time that EOH had reported a loss attributable to owners, or the net income. First time. And the market continued correcting. Now, here's a very interesting announcement. Between the 9th and the 12th of October 2018, that's the headline, Stephen van Coller in EOH share buying spree. During this 3-day period, van Coller bought 250,000 shares worth 8.3 million, giving him an average price of 33.20 Rand. Now, it's obviously very encouraging when the CEO of a company, even a company whose share price is depressed, buys shares in the company. It shows that there's intent, and it shows that there's a commitment, and you would expect the market to take that as a positive sign. But what happened? The share just continued moving sideways and starting to move lower again. And on this day, 30 November 2018, appointment of Financial Director, Ms. Megan Paidigadu as Financial Director. So new appointment, now there's a new CEO and there's a new Financial Director. And what happens? The price just keeps going sideways, just keeps going sideways. Just keeps going sideways. And what happens is we start to see volatility come back into the share price, which would have made me very nervous at this stage, as the likelihood of invalidation is now starting to be high. And what we saw happen was eventually the share broke below. So this is invalid, it's no longer 5 waves, means we were wrong. We can remove that. We are invalidated. Okay, so what this means then is that this wave 5 is definitely not wave 5, and already we can start to see how the market is trending lower. So in real time, I would have probably given the market more time just to show and prove itself as to what it was doing. And coming back to this drop on this day, there was more bad news for EOH. 12 February 2019, EOH shares plunged 34% after Microsoft termination. EOH says Microsoft did not give any reasons for terminating the agreements, and later on the day there was an article detailing EOH van Coller hires legal firm for internal investigation. So again, just more and more bad news, and as day progresses, 18 February 2019, EOH Microsoft ensnared in SEC corruption complaint. The allegations center on a contract worth 120 million. A whistleblower claimed the government department overpaid EOH Mthombo to the tune of millions of dollars for Microsoft software licenses. Ish. Just gets worse and worse. And 20 February 2019, another headline, EOH buffeted by an anonymous tip starts whistleblower app. And later on that day, another headline, EOH founders quit in board shakeup as scrutiny intensifies. And the main headline there was Chairman Bohbot The firm's former CEO for 19 years will step down end of February. He's now stepping down as chairman. And not too late after that, another headline, 25 February 2019, EOH suspends employees implicated in graft-tainted contracts. EOH CEO Stephen van Coller says none of the employees implicated in the probe remain in the business. Well, again, this should have been received as good news by the market, but what happened? Market just kept going down. 20 March 2019, EOH shares plummet as group delays publication of financial results. Company says it is to allow newly appointed group financial director time to complete financial review, which makes sense, but clearly the market didn't like that, and the share continued lower. And another update as Microsoft terminates more agreements with EOH. EOH says it's disappointed at the unilateral manner in which Microsoft has terminated the relationship prior to giving consideration to the impact on South African corporates. So Microsoft is clearly doing the best they can to distance themselves from EOH. And the market resumed down. So what we see here now is this is starting to take the shape of an ending diagonal. Now, an ending diagonal is, in other technical terms, a falling wedge. So because we can see we're not impulsing here, the only other pattern we can form at this juncture of the market is an ending diagonal. And we can actually start to label this ending diagonal in anticipation of what's still to come. So what we have here from this waveform is a wave 1, wave 2, wave 3, and remember, with an ending diagonal, the fourth wave terminates in the price territory of the first wave. So somewhere around here we can anticipate wave 4 before we come back down for wave 5, which will then complete this wave 5. Okay, so we have wave 1, we have wave 2, we have wave 3. Now we are building for wave 4 within the ending diagonal. Now here's an interesting thing. Again, Mr. Market. On this day, 12 April 2019, SENS release trading statement 6-month period ending 31 January 2019. From continuous operations, all key metrics, earnings per share, headline earnings, revenue, normalized EBITDA, everything is down, and not just down a little bit, down a lot. 700%, 400%, EBITDA down 64%. There's a headline later on the day, EOH to post huge loss on impairments. What happens? Market shoots up. The next day, there's a online article, EOH shares surge higher ahead of results. Shares soared nearly 20% on Monday ahead of interim results on Tuesday as investors began taking the view that the worst may be over. Well, from an Elliot Wave perspective, we would have known that we are still in wave 4 and there's still a wave 5 to come. So again, looking at it from a pure fundamentals perspective, or just throwing a blanket statement that investors think that the worst may be over, doesn't give you perspective of where the market is in terms of the trend. And the next day, an even bigger rally on the day that the announcement, the results actually come out. So the results for the 6 months ending January 2019, all the metrics down and down big time. EBITDA down 64%, headline earnings per share down 410%, earnings per share down almost 750%, cash on hand down 33%, NAV down 39%. But the market shoots up, and that day it was up 55%. And later on that day, there was an article, EOH extends huge rally as Coller talks up turnaround. And later on in the same day, EOH shares jump after interim results reveal cleanup. Processes in place to repair governance and sell non-core assets to deal with debt. So on this day, we have a combination of the results as well as aftermarket news. And the very next day, 17 April, another headline, EOH soars on turnaround plan. Shares in EOH doubled in value since Monday. So it seems like the new CEO is starting to have an impact in the market now. The share is starting to pick up and confidence is starting to return to EOH. And now let's see what happens to the share price after that. On this day, 5th of June 2019, EOH appoints Xolani Mkhwanazi as group chairman. And a couple of articles here. 2 July 2019, EOH offloads CCS stake for 444 million. So now they're starting to sell some non-core assets. Update on the 3rd of July 2019, ENS Africa has concluded the investigation into public sector contracts and has submitted a forensic report and its recommendations to the board of directors. So some progress there, and the market seems to like those news, pushes up a bit, and a few days later, EOH announces leadership changes, and this SENS announcement came just before market close or at market close at 5 o'clock. Executive Director and CEO of EOH subsidiary Nestec, Zunaid Mayet, has resigned as the CEO of Nestec and from EOH Holdings Board and various other EOH subsidiary boards with effect 12 July 2019. So 3 days before this SENS announcement, Zunaid had resigned out of the blue. Well, according to the market anyway. Executive Director and CEO of EOH's ICT business, Rob Godlonton, has resigned from his role as CEO of the ICT business and various EOH subsidiary boards with effect from 12 July 2019. Same story. So what's happening? 15th of July, there's a SENS announcement as the market closes about resignations, which happened 3 days ago. Interesting. And what happens as market resumes? Okay, I missed an article here, a couple of articles. The next day, okay, so on the 16th, let's just go back a bit. I just missed one article. On the 16th of July, a lot more news on EOH, update on the investigations, SENS announcement. The ENS Africa investigation has found evidence of a number of governance failings and wrongdoings at EOH. And later on in the day, online article, EOH rocked by top-level resignations. Zunaid Mayet and Rob Godlonton have quit with immediate effect as group releases report into EOH corruption. Now, anyone who's reading the news on that day would have wanted to link Zunet Mayet and Rob Godlonton into the whole scandals that are being unraveled here. But later on in the day, the CEO gives clarity and says the departing EOH executives were not implicated in the corruption. This was now Stephen van Coller, the CEO, and emphasizes that the resignations are in line with leadership accountability. And later on in that day, another article, EOH fraud disclosure includes payment of bribes to secure state tenders. So, again, bad news comes back. And how does the share react to this bad news? Trickles down a bit, and then on the 2nd of August, EOH Board appoints Chief Risk Officer Fatima Newman to the board. And from there on, the market continues trending lower. So at this point in time, it's safe to say that this point here is now wave 4 of the ending diagonal that seems to be forming now. And you can see that the market is starting to take a more sideways movement. So as much as the share price is still falling, it's falling at a decreased rate or declining momentum. And this is typical with falling wedges or ending diagonals. So now we are building up for wave 5 of wave 5. And some more news here. 18 September 2019, trading statement for the year end July 2019. Earnings per share looking bad, expected to be down over 1000%. Headline earnings per share expected to be down almost 750%. Article later that day, EOH to report a massive full year loss, mostly impacted by impairments. So fundamentals are really taking a beating now. And the share continues trending lower. More bad news on the 3rd of October. EOH subsidiary accused of sabotage and racketeering, raising questions about the group's much publicized campaign to clean house. So just more and more bad news just keep coming in. And a couple of news articles this day. Okay, just a further announcement, and the board has now substantially completed the investigation into the 1.2 billion rand of suspicious transactions, and just more updates around that. On this day, there was an updated trading statement, just more accurate estimate of losses, and you can see there that the earnings as represented by the earnings per share and headline earnings per share were down significantly. And as we move, there was a bit of a spike up in price. 15th of October, year-end results, just confirming everything is basically down. All the key metrics are down and down big time. And later on that day, another article, EOH blacklists 50 enterprise development partners. So again, it's just bad news, but the following day, the market rallies almost 20%. And another article here, 17 October 2019, strategic disposal of Data World Group, more sale of non-core assets. And The share price from there continues to trend lower, 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 and this day, a couple of articles, one article on the 9th of December, headline, EOH blasted over remuneration, and this centered around Stephen van Coller's payment or salaries and bonuses and etc. etc. So yeah, market, well, this article was not too happy about that. And on the 13th of December 2019, another disposal of Dennis for 250 million. So more asset sales. And then on this day, the unfortunate passing of Chairperson Dr. Xolani Mkhwanazi on the 6th of January. May his soul rest in peace. And from there on, we saw the share price drop massively again. And on this day, we are now in 2020, and we are now below 10 Rand. We are now below 10 Rand. So when Stephen van Coller was appointed, the share price was about 33 Rand. And since then, it has just continued going down. And on the 7th of February, there was the appointment of Mr. Andrew Mthembu as the new chairman of the EOH Group. And the price just kept going down. There was an article on the 19th of February, tech shares have taken a beating. EOH is by far the worst performer this year so far. Again, just more and more negative news, bad news, or negative headlines in the media. 27 Feb 2020, JSE listed IT companies torrid start to the decade. EOH is the poster child of how spectacularly bad things can get. So again, the sentiment around EOH just gets worse and worse and worse and worse. And probably the worst of them all was this one here on the 13th of March 2020. Epic fail. EOH boss Stephen van Coller goes from hero to zero on the JSE. And the main quote from that article was, unfortunately, the falling EOH share price appears to rate his efforts as a fail. Now, I find that to be very unfair. When you try to turn around a sinking ship, you won't just come in and stop the slide immediately. It takes time, and the press media was just not fair on Stephen van Coller. That was a very salty article, if I can put it like that. And what we saw actually, funny enough, was not too long after that, the market bottomed. So on this day, 18 March 2020, the price low of not that day exactly, the next, yes, this day, the low of 213 was reached on the 18th of March. So let's just highlight this as a significant low. This is the most recent low now, which I believe is the market bottom at 213. So before we proceed further, let's just look at this ending diagonal now, which I believe is complete. So what we have here in this ending diagonal is 5 waves. Here the 5 waves, 1, 2, 3, 4, 5. Textbook ending diagonal or falling wedge. And A falling wedge being a terminal pattern would then suggest that this entire bear market is now complete. So if we look at this whole bear market, from 180 Rand to 2 Rand was beyond what any technician could have forecasted, whether using Elliot Wave, whether using the double top estimation. The bad news just drove prices lower and lower and lower and lower. And this just emphasizes how corporate governance issues can really damage a company's reputation and also have an adverse effect on its share price. That being said, this EOH scandal doesn't seem to be viewed by the market as, well, not in the same significance as, say, Steinhoff. Why I'm saying that is already I'm seeing much quicker recovery in EOH, and EOH hasn't been condemned by the public or the market in general as much as Steinhoff. So I believe that EOH will recover and is already recovering. And once they start becoming profitable again, hopefully COVID won't have too much of an impact this year. We will start seeing profitability coming in the next year or so. This share has the potential to not only be a 10 bagger, but to be a 100 bagger. So me personally, I am heavily invested in EOH. My average price is about 430. So I'm very bullish on EOH, and I will show you why now I'm bullish EOH. So starting here at this 213 level, let's just push this down. Starting here, 19th of March 2020, trading statement for the 6 months ending January 2020 from continuous operations. Even though the earnings per share and headline earnings per share are losses, so it's actually loss per share and headline loss per share, there's been an improvement from the previous period of 64% and 47% respectively. So the earnings are starting to, or the losses are starting to get smaller. So already we're starting to see improvement. And then here, updated statement, just further update, also showing improvement. And the actual results, interim results for the 6 months ending 31 January 2020. Revenues are still down. We still have losses in terms of headline losses and loss per share, but the losses are reducing, getting smaller, which is an improvement. And with COVID kicking in, there was an article that day, EOH revenue dropped 22%, executives to take 25% pay cut. Then on the 20th of April, there was a further update of the disposal of the remaining 30% in CCS. So again, just finalizing that disposal. And then what we see is pretty interesting. And this is why now I'm starting to get very bullish on EOH. And just to bring back the moving averages at this point, the moving averages, as you can see, there's still a very big gap between the 200 and the 50. They're not showing any signs that the market has bottomed, whereas the Elliott Wave count suggests that the market has bottomed. Again, this is just to emphasize how slow the moving averages are to react to changes in price trend. So the moving averages lag significantly. What we see going forward, there was a very, very positive announcement which came early June, which was very well received by the market. And on the 9th of June, there was a market update around the deleveraging plan. And what happened there was the first capital repayment milestone was reached, and 540 million of the 1.6 billion, which was in excess of the 500 million, had been paid, and it was paid before the due date. So the market reacted very positively to this announcement, and even the next day the market started to pick up. So obviously, law of large numbers, percentages need to be put in perspective, but we can see from this bottom of 2 rand, the price went up threefold to, or more than threefold, to just above 7 rand, and started pulling back a bit. But this update was very, very positive, and it shows that EOH is at least becoming more and more cash generative and is able to pay some debts and reduce the net debt, which is very positive. And unfortunately, some sins of the past keep coming back. 29 July 2020, JSE censures and fines EOH 7.5 million for past reporting errors. And again, these are the legacy issues that the new management still has to deal with, but that didn't have such a significant impact on the price, and the price just kept pulling back slightly, but not so much. On this day, this was not a SENS announcement, but I picked this up reading the annual report for EOH, and this also had to do with the Dennis transaction, where they reported that they had received the cash, and a portion of the cash received, the 16 million, was being held in escrow until 2022. So again, just more flow of cash into the business. And not too long after that, just go back one. On the 22nd of October, trading statement for the 12 months ending July 2020. Again, it's loss per share and it's loss in terms of headline earnings per share, but there's a massive improvement between 66 to 72% and 70 to 76% respectively. So even though the company is still making losses, but the losses are starting to shrink. And for me anyway, it's a very positive sign that very soon the company will be profitable again. And starting to see the market start to rally. And just to show the moving averages again, we're starting to see the moving averages start to converge. So let's just see how the price and the moving averages play out now. Then on the 5th of November, there's a SENS announcement, update on the release of financial results for the year end 31 July 2020, originally scheduled for release on Tuesday 17 November, will be published on Thursday 26 November. So there was a delay. If you remember previously, when this happened, the market went down, and that downward movement was attributed to the fact that there was a delay in release of the results. Same thing happens here. What does Mr. Market do? Doesn't go down this time, but in fact just continues pushing up. Again, same scenario, different result. Anyway, let's continue. And market keeps going up, and on the 18th of November, further announcement, disposal of Mars Holdings. This is part of the Syntel transaction. So Syntel was disposed of here for 211 million. Again, more asset sales to reduce the debt burden. and share price goes up. Another update and a further delay in the release of the results. Now, the results were supposed to have been released on the 26th of November, will now be released on the 2nd of December. And later on the day, there was a newspaper online article, how corruption happens, and EOH CEO says it begins with poor oversight at the top. And again, this didn't have much of an adverse effect on the market. And on this day, again, also this was not released on SENS. It was not in any article. I picked it up when I was reading the annual financial statements. Part of the Deleverage Plan, there was another amount which was to be paid in November 2020, and they managed to pay 450 of the 700 million which was due. And the reason why they couldn't pay the full amount was because of delays in disposals of further assets due to COVID. But the market didn't punish that too much, and the market started picking up again. And 2nd December, finally, the results came out. Cash generation is back. Gross debt is down 20% year on year, now standing at 2.6 billion. Total revenue is still down 25%, but headline earnings and earnings per share, even though it's still losses, but massive improvements, 72%, 68% respectively. And this was the last major news article to date. And we can now see how the market reacted going forward. So see, the market continued moving up. We now have a very, very significant cross of the 50 crossing above the 200, which is called the golden cross, which for me is another bullish signal. But most importantly, we also have a 5-wave advance, which I can label wave 1, wave 2, wave 3, wave 4, wave 5. So saying that the market has bottomed, again, very critical. After a 5-wave advance, I'm anticipating that we should expect a 3-wave pullback. We could already started that pullback, but this pullback should not break below 213. So that is the invalidation level. 213 is the bottom. The market should not break below that. If this holds and we start to see EOH push to new all-time highs or new highs, this will further validate that we are in a new bull market. So all in all, I believe that EOH has bottomed at 213, and I hope that the new management, well, not so new anymore, but continues the good work. And I think here we have really a fallen angel which can regain its glory. And yeah, you just need to be brave as an investor. Do your research, do your own analysis, and look at EOH, especially if it pulls back to about 5 Rand, 4 Rand. I think that will be a bargain for those who missed the initial rally. And again, this really sums up how one can use technical analysis together with fundamentals and also have a deeper understanding of market psychology and see how the market really behaves. It's one thing to read empirical papers on event studies and actually seeing it for yourself how these events such as earnings announcement and news actually lead to different market reactions for the same type of results. So it's pretty interesting, and yeah, that's why I love the markets. I hope you learned something. This was a very educational video for me to make. And like I said, it's part of my investment thesis or my master's thesis, and also forms part of my investment strategy. So it's very critical for me, and I hope you learned something. And yeah, thanks for watching.